everybody. Welcome to the Energy Newsbeat podcast. My name's Stuart Turley, President and CEO of the Sandstone Group. I'll tell you, this is absolutely a critical time in the future of the world. We have the presidential trade wars going on. We have tariffs, but we also want to focus on the global economy and several key leaders out here. And I've been able to meet Mike McDonnell. He is the head guy over there at the MMD Global Advisory, and he sent me over one of his articles, and we're going to cover that article and the importance of Saudi Arabia. What prompted this was an article in the Wall Street Journal last fall, "The Big Problem for Saudi Arabia's Futuristic City, and the country doesn't have enough money." He has a great article on his website. We're going to talk about that and the importance of Saudi Arabia. Welcome, Mike, to the podcast.
Hey, Stu, it's a real pleasure. Thanks for having me on.
I'll tell you, I just really enjoyed our last conversation, and this article you sent, we're going to make sure the entire article is also posted out on energynewsbeat.co.
Oh, that's fantastic.
And so we're going to get this out there. But what prompted this thoughts process for you on the importance of the big problem for Saudi Arabia's futuristic city?
Well, just what you were just saying just a moment ago, Stu, just finite resources vis-a-vis infinite ambitions, or a real desire to attain pretty lofty goals as envisioned, say, by the Saudi leadership. That sort of prompted me to think about this issue. And it actually brought to mind a little bit of literature to me as well. The Ernest Hemingway character in The Sun Also Rises, when he's questioned, Mike Campbell, when he's questioned about how he went bankrupt,
right,
sort of paused a little bit, and he said to the person he was talking to, well, gradually and then suddenly, And just so, if you have in a person's life, or in the administration of a company, or in the administration of a country, if you have compounding decisions which yield very negative consequences, those can catch up with you. And just so, while Saudi Arabia, in this particular example, is so richly endowed with hydrocarbons, it is not quite the leading energy producer or oil producer in the world. For now, that honor falls to us, the United States.
Right.
But nevertheless, an extremely prominent kind of swing producer, in the energy markets in many respects. It only can generate a finite amount of foreign exchange earnings. It only has, like any economy, a finite capacity.
Right.
Capacity that can certainly be managed and developed and utilized, but nevertheless, it's finite. And so for watchers of Saudi Arabia, or say global stability, it's interesting. And I guess it's really incumbent on anyone of us who watch how the world is developing to see how well such a significant country like Saudi Arabia manages itself, so to speak.
Well, Saudi Arabia, with you bring up their city that they're working on and the amount of money that they're putting out into hydrogen. They're really using their oil and gas as a piggy bank to fund not only their sovereign wealth fund, but their big projects that MBS really wants done out. And they need a higher price.
And a lot of those projects are definitely worthwhile pursuits, for the kingdom. Their Vision 2030 has some very ambitious and, again, ultimately beneficial goals that they've set out for themselves, namely to increase, to the extent that they can, exports that are not so linked to the energy sector.
Right.
So that's a challenging effort, but that's something they want to at least explore. They want to cultivate better and more ample commercial activity among small and medium-sized enterprises. And, despite, say, very, very conservative religious tradition in Saudi Arabia, they do want to incorporate more women into the workforce in Saudi Arabia. So there are a number of different social and economic development goals in their Vision 2030 that they want to finance and put forward. Now, Stu, you mentioned the city, which they call NEOM, their planned city.
Right.
That's really ambitious, and they want to really develop that from scratch. And they would like that to become sort of a world city, a world capital in many ways. That's a wellspring for innovation and development in the arts and the sciences and different economic and commercial activities. That's all well and good, but it's a very ambitious thing to do.
Right.
And the scale of NEOM that they at least envisioned is pretty gargantuan. So what's going to be very interesting to see over the next 6 months, next year, et cetera, is how they, in essence, Prince Mohammed bin Salman, MBS, and with reference to his father and kings and the leader, the monarch of Saudi Arabia, how they recast perhaps the ambitions for NEOM and or not. And that's going to be very interesting. And that's kind of a risk linchpin in many ways.
Right.
Again, the use of resources that they have, fungible foreign exchange earnings that they have to be deployed in an effective way for that economy and that society. And that's the rub.
One of the things that comes to mind is that in the news cycle today, we're talking about the Trump tariffs. Everybody's, there's 90 countries plus lined up to try to visit with the Trump tariff team and everything else. And in my opinion, I think that, and we take a look at, you mentioned the United States as the leading oil producer in the world. We've also really changed how things going there, because I got tickled at President Trump. I'm going about 16 different ways because your article opens up a can of worms to go about 900 different ways. And one of the big things about the tariff war right now is that it is going to be right sizing the tariffs imposed on the United States, which is a global financial change between China and how everything is doing. The EU and the UK are now having to retool, and they're going to be retooling and turning all of their manufacturing into weapons of war. And so they're negotiating with China for more steel. And Mike, this week, you can't buy this kind of entertainment. The UK steel plant was bought by China, couldn't get coking coal. So the UK government is looking at stealing it back and running it by the UK, but they had to buy coal from China. China closed all their coking coal plants, and so it actually came from Australia. And then they put a whole thing. So you got this is the most unbelievable time we've ever seen. And
Yeah.
the Saudi kingdom is actually a solid foot in this environment of sanity. And I did not have this on my bingo card because Chris Wright, our Secretary of Energy, was just there. Perfect timing that the relationship with Saudi Arabia is actually very important. They're having to really work to control the other OPEC plus members in their production because they really need $80 to $85 oil just to pay for all of their sovereign wealth fund plans. And the Trump team does not, the oil and gas industry, the United States, while consumers like lower gas in everywhere but California, because California's policies is so high. Gas prices are high in California because of taxes, and then the rest of the country is doing better. But the U.S. needs at a minimum $60 oil for the Permian, and you need $80 to $85 for the sovereign wealth fund to be able to fund itself and all of their other energy projects. Boy, Saudi Arabia's got their hands full, and that seems like they look at management by decades, if not multiple decades. And the United States looks at management by the next election cycle.
Well,
That's a lot to digest.
yeah. I mean, there as just Stu, as you're putting it, there are challenges to go all around. And there are definitely public policy challenges here. And there are public policy challenges that the Saudis have to take up and look squarely in the eye. And that goes really for the rest of the world too. For the kingdom, it's really a question of effectively household management in terms of what they set out to do,
Right.
what they can conceivably realize, and how they can kind of, to the extent that they have to, how they can kind of manage their losses, so to speak, in terms of public policy initiatives that might not be wholly viable. That's going to be really important for them to really consider.
Right.
And to the extent that they do not, that's a big risk factor for them.
Right.
Now, again, the public investment fund in Saudi Arabia has close to $1 trillion in assets. And Saudi Arabia, as the kingdom with its monetary authority, managing its exchange rate, the rial, and that exchange rate, and the flow of capital in and out of the country, and the foreign exchange reserves or holdings in Saudi Arabia are roughly around $300+ billion.
Right.
It's not insignificant, obviously. But again, very ambitious development goals versus, nevertheless, a finite resource base or a base of fungible capital should raise questions and requires, a reasonable monitor of how things are developing over there.
Absolutely. I loved your in fact, your article was very pointed. So in brief, it'd be important for the external investor and lender to do due diligence in Saudi leadership.
Sure.
I like the way you phrased everything in that article.
Oh, well, thanks. I appreciate it. Stu. I certainly don't mean to be alarmist.
Right.
I'm just saying, you kind of have to watch things.
Right.
And definitely watch for improvements and for positive proactive steps, which I think can be in the offing.
Right.
But also, again, if you're an external lender or if you're an investor, watch for resource constraints, liquidity constraints that can cause problems, that can effectively interrupt the realization of the business that you want to see done. So I think it's a really important thing to consider.
What is your gut feeling? I love what you've done on this and at MMD Global Advisory. When you take a look at this, what do you feel about
my gut feeling is I think that there are going to be adjustment processes that unfold there.
Okay.
Yeah, that's my gut.
Adjustment processes. That could be like, honey, take out the trash or you're going to get
that's kind of like, that's on the honeydew list. But no, I think that they'll change tack in terms of if they have to, and most likely they probably will have to resize their ambitions for a city, like, for example, their planned city.
Right.
And because bear in mind, I think there's a certain rationality that's gonna prevail.
You bet. Do you think?
But again, nobody has a crystal ball, and people, whoever they are, they do the strangest things sometimes. And so that means that you have to sort of monitor the situation, and you have to size your own bets and your own commitments accordingly.
Now, as we sit here and we go through this, what are your initial thoughts of the trade war with the tariff? Because in the financial world, you got to sit back and take a look at what's going on. And I want to hear what your thoughts are on that. I'm just going to throw it out there for you.
Well, like any investor, last week was a humdinger.
Humdinger. I don't know that was the word I heard for all my day trader friends.
Yeah, a lot of words you probably heard there, Stu. You could listen over here in my living room, and you could have heard a lot too. Yeah, the trade. I think there are going to be accommodations made with the broad survey of countries. With most countries, it'll be very interesting to see what China does and how it responds to us. That is kind of being taken to another level, say, by the Chinese leadership in many respects. But I think there are going to be certain accommodations made among the majority of trading partners with the U.S. because we're such a substantial market.
Right.
Trump is the president that sort of raised his hand, so to speak, in terms of how the U.S. has run its post-Second World War political economy vis-a-vis the rest of the world. Now, there were maybe rationales or understandable motivations for having what had been for a long time kind of an accepted fact that the United States would be this substantial market to draw in people and to cultivate alliances and friendships with the rest of the world. Now, over that 80-year period, there are a lot of foreign policy benefits, and there was, one could argue, some geopolitical stability dividends from that. But nevertheless, that's had consequences here for the United States, for the U.S. economy, and for U.S. society. So it's not, it's not out of bounds for Donald Trump as the president of the United States to say, let's recast the trading relationships that we do have. Let's examine them again, and let's do so from a perspective of, what is equitable for American society, for American workers, for the American economy,
Right.
and what can be a positive outcome for everybody.
Right.
So now it's interesting. It's not as if the United States is trying to exact some sort of unfair expense or cost on its trading partners. It's just trying to re-examine what the terms are in our commercial relationships and how we can make them, again, more of a mutual positive sum outcome for everybody. I don't think that's so outrageous to ask. The thing about Trump that's very interesting is he works and acts with alacrity. I was talking to a friend of mine who is not a U.S. born person, a foreign person who emigrated from another country, and my friend said Trump is a businessman, as she put it, and so that's how he sort of comports himself and implements policy. And he essentially does what he says he's going to do. He's talked about this.
Right.
He talked about this through the 2024 campaign, and he then did it, meaning he implemented as he was allowed to as president of the United States with his ability to write executive orders, and he did so. So I personally think it's going to ultimately work out, and
could be bumpy.
Could be bumpy. And also, and it gets back to what we were saying a little bit earlier, the United States has, these institutions in place which allow an electorate to decide on whether or not they agree with what the guy who's in power is doing. And so if President Trump is not successful in his efforts, then they're going to feel that in 26 elections, and they'll feel that, and the Republican Party will feel that in 28. So there are motivations to try to draft something that works and that delivers real benefits for the American people.
Right.
And so a lot of volatility.
Wow.
We'll see how it goes.
As an investor, where are you going to park your money? I mean, if you were just sitting here, because as a global financial marketing, not marketing, but when you take a look at global finance, and that's what your website's looking at, where are you going to park your money?
Well, a lot of people have been parking their money in gold, for example. They've been, the precious metals have been a beneficiary of global investor anxiety over the last year, and there's no doubt about that. I think as an investor, when things are uncertain, that's the opportunity. That's the time for the speculative trader. Right. But he who lives by the sword dies by the sword, meaning how you manage your leverage and your exposure, and how you wrong-sided. Nobody knows the future, and you have to, if you're a speculator, you have to sort of really think about what your downside is and whether you can accept that. Yeah. And then you can go and try to make some great speculative gains based on how you see inflection points developing and how you construe motivations and policy steps that maybe others don't see. And that's the key to investment windfalls. But exciting times like these are, that's the real that's real stuff for speculative traders. And
one of the fun things that I was able to do is branch out my portfolio, and I do not give investment advice. I just want to say that for clarity.
I'd like to add that myself. I'm, MMD Global Advisory is not a registered investment advisor. We don't deliver actual advice on security purchase or sales.
Exactly. But this is our disclaimer here. But on the other hand, I do evaluate oil and gas deals as part of my company. And when you take a look at, is it going to be a vertical well versus a horizontal frac well? And the frac wells in the Permian need a higher price than do just normal conventional wells. And so my investment portfolio right now is doing quite well, even at $60 oil. I'm okay. So if you pick and choose individual investments, you can make money if you are watching how that operator is working or where they're drilling or their long-term plan. There's a lot in the oil and gas space because the ESG market, Mike, over the last several years has done a great thing for the oil and gas industry. And that is, ESG has really forced the American private and public to give money back to their investors. And the oil and gas space has been some of the best investments that are out there. So, you sit back and go, ESG was a dirty word now, but it actually did a good thing over the last 15 to 20 years. Investors get their money back.
Yeah, well, there you go. A management challenge is met, so to speak. So I guess what I'm saying is ESG impelled some solid and rational decision making from folks, just as you're saying this do, and money was reversed or remitted back, and that difficulty, I guess, was accommodated or met.
Right.
But it's going to be really interesting to see how Trump policies, how this administration's policies really do ultimately play out over the next couple of years, even over the span of a year. We're going through this real volatility with the tariff regime adjustments. But as they say, this too shall pass in some way, shape, or form. And
kind of like a kidney stone.
What's that?
Kind of like a kidney stone.
A little bit of gout that the economy is having. And, we have a format that's in place, more rational or more effective deregulation.
Right.
We have a much more tax-friendly business environment. And I think...
And Saudi Arabia has invested a huge amount into the United States again. And we have Japan, Tokyo Gas just bought all the way through from in the Haynesville, which is just on the east side of Texas near the shipping of the LNG facilities through Louisiana. Tokyo Gas just bought mineral rights and everything else. So they own from the mineral, all the molecules all the way out to the LNG port. That's called energy security. That's also called investing in the U.S. so that you can get away from tariffs.
Well, and the direct investment targets that different companies, have pledged into the U.S. economy are pretty astounding. Now, to what extent those will be realized, we'll see. But the numbers are pretty large, anywhere from, if you look in one direction, that's roughly $3 trillion in total. If you look in another direction, someone is saying it's roughly $5 trillion in total.
Right.
Even a fraction of that is going to be a lot of money, and a lot of money coming into this economy. So there's a big motivation. And, the thing that's very interesting is that this is a $30 trillion economy. And it's a $30 trillion economy with a population of 340 million people. And that is relatively seamless. That functions very well in a federal style. Most people file their taxes. Most people are law-abiding people. Most people are productive people.
Right.
It's a great place to do business. And that's really the ace up the sleeve of the American economy and U.S. society, not to mention that we have such natural resource endowments in terms of energy, water, food. So,
and President Trump's actions have been to be bankrolling all of those assets and putting them into reestablishing them. He just reestablished all of our coal mines on the financial books. On of our coal, he just redid all of the new oil and gas reserves and put them as assets. He's redefining how the U.S. looks at its natural resources.
And also bear in mind, too, that the United States is developing and making use of technology. And with technology improvements, there's better, more ecologically sound energy that can come on stream. There's going to be much more sound, much safer nuclear power. There can be a way, there are methods that can develop which can make better use of coal as an energy resource that doesn't have climate consequences in the way that it formerly has had. So there are technology improvements, innovations that can make the United States, and make the world for that matter, much more secure in terms of energy availability and production.
Cool.
Yeah.
Well, I'll tell you, this has been a lot of fun, and I hope to have you back and visit about your next article, because I want to know what you're thinking around the world. Mark, you're out in California, so how do people get a hold of you?
Well, you can. I do have a website that folks can go on to, which is www.MMD Global Advisory, all one word.com. And there I have
articles
of probably around 80 or so different blog entries that I've done on different aspects of geopolitical, economic, country risk, market risk, and feel free to access those. And my contact information is there. And I would say that's the best way to reach me.
Sounds cool.
Through my site. And Stu, I've really enjoyed this, and it's great talking. And
I'm looking forward to future discussions. And as you write your articles, send them, because I'd like to have them up on energynewsbeat.co, and we'll put you as a contributing author on the ones that you want up there. So I do appreciate that. And so, because your views are very good, I like having the world view from an economic perspective, and we have other contributing authors that we put out there as well too. So thank you very much.
Well, I really enjoyed your questions and your far-ranging knowledge of American politics and the energy markets and what's going on in the world. So it's a real pleasure to talk and share views with you and share opinions. And
I think the world's going to get a lot better. I think
there's great potential for it. I really do. And, as folks always say, stay tuned. No.
Buckle up. If you don't like it,
buckle up as well. But this is a real pleasure, Stu. I really appreciate the chat be on your show.
Let's go do something epic today. How's that sound?
We'll try.
Okay. See you.